Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Good morning, Marty. And how are we doing in YouTube? All right, I'm assuming I'm okay in YouTube because of the delay. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile. In addition, it is based on structured trades that are available to everyone to reverse engineer and build out a trading plan. And this is what the Trader Lab community is all about, a group of like-minded traders who've come together to leverage their collective experience. Trader Lab is a advanced trading methodology. However, it doesn't matter how long you've been trading. It is really about the business of trading and understanding that this is a business of statistical probabilities and not predictability. The market is 100% random 100% of the time. Similar to gaming, and I think it's very important to understand the business you're trying to be in. And in spite of the random winnings that we all get when we use indicators and time frames, if we don't understand the actual way the market works, and that everything works randomly, we can pursue processes that have no statistical edge. And even though they have intermittent winnings and even runs of winners, over time they are losing processes. So how do you differentiate? And does it make sense to keep working on processes that are random or develop processes that have statistical probabilities? And this is not about P&L of a collective group of trades. It's about individual trades that have edge and only interacting with the other participants when you actually have a vetted edge. So that's the business of trading. If you're interested in that and how to potentially put these pieces together, then you might want to consider visiting the Trader Lab community, and there is no cost for that. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is for educational purposes only. You have to vet everything for yourself, and this is about helping you develop a process or trade plan. The 60 PDFs are available to everyone. There's a link in the bottom of YouTube. If you're interested, you can visit the Bookmap Discord Trader Lab community. There's no cost. However, you do need to verify your Discord email, and you can do that. It's very simple, and if you're not a Bookmap subscriber, the Trader Lab and the Bookmap community server with all the additional education is available to you. And again, there is no cost, but you need to register to make sure you're not a spam. Speaking of, let's take a look at the higher time frame. Now, this is Friday's behavior. Now, our target for Friday was this, and that was at 57.18. Now, I don't quite recall the high of the day, but in the Trader Lab, the idea is to attempt to trade the targets. Now, the day before, on Thursday of last week, the retail price was around 56, 58-ish, this yellow line. So what we did is we opened, actually, let's go back to Thursday. Thursday, we closed on the low. We gapped higher, tested this level on Friday and found our buyers. We then came to this level, which was the next target up. And that, as you guys know, if you follow the stream, that was our plan. Now, today, of course, what are we looking for today? Well, obviously, and it's not obvious, what happens in the ETH, and then either we're going to stay in this range, come back and test this high. But what we did is we gapped, price gap, internal gap, and we opened right at Friday's low a day. So that sets up this yellow line, which is the high volume from this day. So think of this like retail. If the price is too low, the market comes, checks it. If it's too low, it can go back to where it was previously, too high, which is up here. And if that's too high, we can come back, it's shopping, and test too low. If this is too low, we can come back and check too high. And right now, too high is around 5,700, and this is not a recommendation. We have some obstacles to get through. Now, just to make it more fun, if we fall out of this range, out of this, we can come down to this level, and we have all the possibilities to come back here, which is the high volume for this whole distribution. But right now, our little world is this. This distribution, this is like, oh, it's on sale. I'm not paying that, you know? So up here, we tested a retail price. Think of this like shopping. If the price is too high, the market will check it and go, nah, I'm not going to pay that. And then if the price is on sale, the market can check and go, you know, that's a great price. But the sellers aren't willing to sell it to you here. So the market then rotates trying to figure out what's a fair price. So we can glean that and generate levels based on participant behavior, not indicators, of course, and then based on how the participants value, and that's the purpose of the market, try to figure out what something is worth, which of course is the always the question, what's this thing worth? Don't know. So then we have to look at our levels. So let's take a look at a couple of things, and then we'll go into the RTH Open. Now, guys, this is a specific plan, and today it's more. I find low conviction days are more difficult to trade because there's nobody really taking control. It's sloshing. There's no commitment by anybody. It's mostly retail traders, us, swapping contracts, and algos. And if you notice, algorithmic behavior is very active today, more active than it is in directional markets. Kind of different behavior. And this is subtle, and I'll try to talk about it a little bit today if I can, especially if we get into live market here, because after the fact, you know, everything is... you're not going to see the algos adding and pulling and pushing and filling and flipping and the rest of it. And if you're interested in that kind of behavior, you should visit the Bookmap server so you can learn order flow. And it adds another piece that, to me, if you don't have order flow, you're only seeing price. You're not seeing what actually moves the market. So RTH Open, we're barely inside of range, and there's a little more. We're outside of yesterday's value. And value, now this is a target up on top. Settlement should be up here. So that's a target. We have 1.5 IB, which is a target, but the more important target, if I can get this, is value area. Where is it? Got to be right up here. Yesterday's value area low. Let me just see if I can find this thing. Great, where'd it go? Guys, did I lose? Maybe it's covered up. Yes, it is. Let me try to get this for you. And I'll give you just a couple simple statistics to kind of help us there. So this is our target, and it's not a recommendation. Now, what is it? What is this all about? This is where the profile comes in for us. If we open and we're on the edge of Friday's range, and 1 second here, barely in range, but not in value, the market is slightly out of balance. That means that we might be priced a little too high. So let's come back and look at, let's try to get back here. No. Sorry about this. Gotta try to move all these things around, you know. So considering we're opening lower and the market's long from Friday, initially the idea is, for me at least, is to sell and look for us to clean the stops out. Get under yesterday's low. This is a target. This is the retail price previously that we had left behind. We have the ETH low also is somewhere down here. Did I lose that? Probably did. Where's, guys, I think some of these levels are covered up. I'm just trying to find them. ETH low. Can't see it. Guys, can you tell me where the ETH low is? I think it got covered up. And if these levels get covered up, I can't see them. 55 quarter, thank you. Well, that'll tell you why. So 55.25 is the ETH low. I'm just going to throw it in here so we have it, since we can't see it. And there's over a 90% probability we check either the ETH high or low. This is a key price. It was left behind. We didn't get to it on Friday, and we know there's stops under yesterday's low. So initially, it was shorts for me. So let's go take a look. Now, these are structured trades, but I'm also going to mention to you that what I was anticipating early was rotational trade. I did not see any kind of conviction. So other than we opened on the edge of Friday's range outside of value. So that means the market is out of balance. So right here, either a higher time frame player comes in and drives us down, or we go into two-sided rotational trade. That's what I know. So here we go. So the market opens. Now this is called VPOC migration. We have resting liquidity here. And I'm also, I don't see anything large in the book. So initially that's not material because they might come in, I don't know. And by the way, the only thing I know for sure is that I don't know. So I don't know. So in the Trader Lab, the idea is to anticipate behavior, but not to predict it because we don't know. So if you know you don't know, then it's really trade plan specific. And mean reversion, which is what this is mean. It's hard. And the reason is you have to trade outside in, not inside out. And this causes a lot of problems, of course, for us because, and I always suggest don't trade the open because you don't have any reference. It's just hard unless you're in you get directional. Then we have trades that we can use in a directional condition because it's context specific. If we don't have conviction and we don't see a higher time frame or aggressive participant in here, then we have to be very careful for a potential rotational trade because it's only us. And retail traders, we trade against each other, but we're not the power in the market, So retail traders, when they get in the market and we start rotating over ourselves, the fuel for these rotations are, for example, if the traders get long, there's going to be stops trailing this, right? If the market comes down, we're going to take these guys out and then we're going to get buy stops above the swing down. So it's important to understand market mechanics. So we have our liquidity here. So let's watch our liquidity. So at this point, it looks to me like the market is going to go up. However, joy oh joy, I have this open, high probability. I know about my stops over here. This certainly doesn't look like we did any damage to the longs. What do you think from Friday? So this is open and the ETH low. So for me, I'm seeing the buying and I don't know quite, when I look at this, I'm going, that's interesting. But since I use order flow, I'm going to be looking at this and I'm thinking, well, I have this and I have this. These are high probability. So I'm going to be looking for rotations. Now in the ETH, this is the retail price. So I have the last auction is here. So I'm at the moment rejecting everything above. At the moment, I have yesterday's lows and 12 stops came out. Really? I think we got a few more, don't you? And then this. So that's the thinking and the plan. So let's watch. This, I don't know what you're doing in here. We're taking you out of here. So for me, I was looking for shorts. Now, right here, this is really a different trade plan. And I always say in Trader Lab, don't trade the open unless you isolate it and have a specific plan. Let the market set up, get a sense what the condition is. And then in the Trader Lab, the idea is you have a trade plan that is conditional. In other words, context oriented. If you can determine the context, and you can't just go running in here, if you, under certain conditions, these are longs. This is not the condition. So if you're trading the open and you don't have a plan for mean reversion or specifically a plan for the open, don't trade it because you're going to take a lot of losses. You can hit your loss limit by not being patient. And I can suggest to you that lack of patience is FOMO. So higher, higher, higher liquidity, selling icebergs. Let me see if I can see this. So selling icebergs here at the liquidity, more selling icebergs, buy stops coming out. This is my retail price. Here's my high volume, and this is micro. So I'm looking at this and I'm going, same thing you do. I go, what's happening? So I'm watching. I'm above this, the retail price from the ETH. And what this is telling me, these variable high volume nodes, is that buyers were here, and it gives me these little nodes. And these are like micro structures. This is fractal trading or structure trading. And what it is if this is too low, is this too high? And the retail price is right there to high volume. Think of it like shopping. If it's too low, I leave the store and I start the process at another location. Too low, and you notice I'm not taking this out. Too high, too low, retail. If I leave it, the volume and the price are moving together. That is suggesting the buyers have demand and they're willing to pay up at this time. Too high, too low, let's check. Retail, still too low, and we go higher. Too high, too low, too high, too low. Retail, we move higher. Now here, I get, and the yellow line is representing, it's called the developing volume point control. Now I come to my liquidity and I interact here, and you'll see these green bubbles. This is the delta. So as we're going along, you'll see that the buyers are more aggressive. This is just another way you can use delta. Delta's aggressor, and it's made up of stops and initiative behavior. So you don't really know if it's going to be absorbed on the other side by the sellers or what's happening. So buyers, I don't see my sellers. Do you? Buyers. Now here I get huge volume relative to what's gone on. By the way, we're in 28 seconds. This is another reason why you don't want to do anything early. So I'm looking for the short. And yes, I do trade the open. And I tend to take more stops in here statistically because I can get fooled very easily. I don't have structure, but it's part of my plan. So I take my lumps with everybody else. Now here I have absorption. I can see it in the delta. See this? I got a higher price and I got less than. So what I have here is buy stops coming out, and now I have my icebergs up here. And here I have potential exhaustion. I don't have aggressors up here. And where's my buyers? So right here, I have my VPOC migration. My buyers are here. My sellers are here. When I get below the buyers right here, this sets up a short for me. And what I'm looking to do is come back here and come out the bottom. So let's take a look at this. This is my scale right ahead of this. So this is my first short. And I think you guys understand why, right? Do you have any questions about why this might be a short? How are we doing in YouTube? Please give a like if you like this. Any questions in YouTube or in the Discord, Trader Lab, why this is a short? Because today is one of those days that I think is hard to trade because it's very easy to get myopic and not have a plan for this. Are you guys with me? How we doing? Yes, Chirac, it is. This is based on order flow, this liquidity getting filled, and absorption. These buyers were absorbed by this, okay? So that I can see here with the heat map and the icebergs. So the icebergs are limit sellers, and they're right over here. So I get my buyers, big buying. Now, right here, what's going to happen is either I'm going to fail here or at least test. If I come below, this sets up a short. If I keep going, I got nothing to do. When I continue higher, right here, I don't have a short. But and I'm watching the delta. So this is delta divergence, really. If you want to think about it, higher price, less of something. And then over here. So I got more sellers here. And think about it. If we had sellers over here and the buyers interact with the sellers and we go higher, right there, it looks like we're going to keep going. But we run out and we get more sellers here. And I come down. I'm now below these buyers. So we know that they were absorbed, and you don't know until you get below them because there's no buying above it. Now let's look a little more subtly. Look what happens here. Liquidity. Now I'm just going to focus on something different here today, just to keep you guys from passing out. And the nature of the market is also conducive to this kind of narrative. So, and I see this. Now, why wouldn't it be over here? Because their idea, why does this come in here? Well, we don't know exactly, but the guesstimate for me is to push the market down so they can be buyers. This is algo. So, and this is your support if you want to think of it that way, because the buyers got above it. The other piece here, and I'm putting components together for you, is that I'm below this. Break low right here. So this is a trigger in the Trader Lab. So I have these pieces. This is a structured trade if you vet it. And it can be problematic like all of them, But this is another piece. So now I have this, who knows, here, below, there, press, break, trigger, short. This is an entry right here in the Trader Lab. Stop goes here, and then to here for scaling. Then we're going for the ETH. Well, actually, this and then that. Clueless. So let's look. These guys are pulling. Let's just watch. If it was live, it'd be more interesting, but maybe we'll get to that. So here I have some buying icebergs. I got buying icebergs there, there, and I have this stuff coming down. So let's try to watch this. And you know, if you're watching a heat map, it's flashing and flipping. It's all algorithmic. So anyway, so risk neutral, he's chattering, and I get taken out. Okay. So I was going for this for the next target and then holding another one for down here. So I thought that was very exciting. So now what I see is, okay, two-sided trade. Okay. And I still have this as a target and this 90% probability to take either this or the ETH high. So I'm still playing both sides. Let's look again. And sometimes I'll tell you, mean reversion, it's mean, you know. So if you come up here, so this is where the sellers were before. This is a variable high volume node. I got to do some more of this. And the reason you're getting all these distributions is the market's just auctioning around. There's no direction. So it's slosh, and the other term I like to think of as slop. Slosh, slop, annoying, and hard to trade. I find it hard to trade because, you know, I'm trying to get the targets, and then if I find my buyers here, which, you know, you don't know until you know, which is in hindsight, if I come across here, which is my new retail price, then I can anticipate it coming here. And if I come here, my opening swing high is there, and I have liquidity here. So I know there's stops here, right? So in two-sided trading, I cannot step in front of this. I have to wait. Now, right here, notice what happens here. You get some sellers. I look at this and I'm going, oh, it's going to go down. You know, and this is who's talking, who's in my head? The lunatic. Hide. Oh, gee, you should have shorted that. It's, you know, it's going to go there. No. Where's the fuel? It's up here. If I come up into these stops, which are sitting above the opening swing high, and I run out of buyers, and I don't know where this thing is going to go. You see, this is what makes this hard. I'm now above this. Here's my buyers. And this is very hard to trade. Okay. My microstructure is right there. So this is a high volume node in a microstructure. And this operates very much like a VPOC in here. So this is for the whole day developing high volume or retail price. And then when I come out here, I get the same behavior in a fractal. And if I can get short, this is where I'm going, and then I'm looking to come back down again. So let's see what it does. See it? So this is very hard because, and here's what's so hard about it, the range. So I trade this stuff, but I have to tell you, it drives me nuts. And the reason is it requires discipline, extreme discipline, because you just have to be on it because it's so easy to get chopped out in this kind of stuff. It just is I find it much harder to trade than other conditions. So, because if you're going to get short, you might be looking in here and you'd be getting short here. Your stop needs to be over there. Well, if we're in mean reversion, we can come across and come back down here. So the suspicion for me is rotational trade. So let's just see what it does. See this? Terrible. And where am I going? Back here. This is the same trade, this one that I took that got taken out, and it's the same trade from a different location. So I'm still trading the same plan, but when it's outside in rotational trading, it is maddening because you don't know where the outside edges are. So, and where am I going? So here, okay, and then here. And look what we do. We come all the way back. So now And I'm really getting, I get frustrated. You do too. I understand. So this is your resistance. This is the rotation. The trade fails out here. And then, now here's the other part of this. When we break below this, all is good. Target. When we come back above this, all is not so good. Here, right here. Because what we're trying to do is what's too high, and we know this was too low in the developing time frame. So this is all fine. And then we come back across to here. Now this, there's no inside out trading in mean reversion. It's outside in. So at the moment, we're in balance. Okay. So my trade was over here, comes here. And now if you're positioning, your stop would be here. I don't do that. In rotational trade, I have an aggressive trade management process because it's nonsense. See? Now, so I don't trade the inside. I only trade the outside. So for me, what's going on? Liquidity comes back in the book here. Sell stops coming out. This is also another target. Didn't get any of that. Just annoyed. And I get this. So, and again, there's no volume in here. So if you want to look at this, you can see this aggressive selling. And right here, the selling dries up, and now you get the buyers. And so it's two-sided. So this is absorption. So when I'm looking at this, it looks like it's going to zero to me. And then when you see this buyer, this is a big deal right here. This is a change in behavior. Look at this aggressive volume. So I was looking at this, and I'm confused in the sense of what's going on here. Has it changed right here? So now I'm just sitting here, and I'm going, well, that might be it. Let's see what happens again. I make a new low. This is where the buyers were. And this is important. When you see this, and you know there were buyers, this was absorbed, you need to be conscious of this because the market can return and take it out. But let's look at the language again. So we know we had our aggressors over here. We know this low is sitting over here. And what else do we know? Sell stops are under there. We come down, the liquidity shows up, and what else happens? Remember, the buyers were here and the buyers were here. Where do we come down? Into the liquidity. Now, when this is happening, we don't know if they're going to pull, they're going to get eaten up by the sellers, and this passive or limit orders are going, we don't know what's happening here. Okay. Sellers are here. There. Sellers. Buyers are here. So right here, they are absorbed. We take out the weak buyers from this leg. Liquidity thickens up. The buyers are above the sellers. This sets up a trigger. And now we have, let me show you micro. Now, when this is happening, I have no clue. All I know is when I see it, I'm reading it. But I have to wait for something to happen before I can take any kind of activity. The microstructure is right here. So there's a little high volume node. This is too high. This is too low. I'm going to draw a little box around this. And this is what the profile shows us. Now, down at the bottom here, it's not actionable. There's nothing you can do. By the time you're conscious, this thing has moved, so this is not humanly possible. But here's the change. So here's the sellers. And why didn't it go down with that heavy delta? It's because of absorption. These are the kinds of things you need to be conscious of. Buyers are above the sellers. The sellers are here. That's why the market went down. The buyers took a shot here. not so much. We'll see you. Sellers are in control. Buyers take a shot here. Sellers are there. So the sellers, unless this gets above here, the sellers are still in control. Sellers, and there they are, there's the icebergs. They're still selling over here. So right here, for me, it's teeth chattering. What's happening? Because if I can't get above here, and this is also important because the sellers are below, this is kind of your transition right here. If it continues, but right here, not so much. Where was my outside edge of the microstructure? It's right there. So what I know is this thing can fall out and keep going, right? But when I see this, now I have the following. Absorption, buyers are here. But we don't know. They're getting tested. Buyers are in here again. Because you see the move up right here, actually. I get my sellers. They are fighting back. It pulls back where? Where the buyers took control, right here. So the sellers take a shot. Teeth chatter again. Sellers, and the buyers are here. And where am I? Outside edge. This sets up a long and its mean reversion. And you might not want to do it. You don't need to do it. You could also just use this to cover a short, depending on what you think is happening here. When we come across this, like this is called balance. And balance is just rotational trading. So let's think about why it's doing this. It's doing this because there's no higher time frame participant in here. At least that's showing their hand. And by the way, this was a report, and I think right around here was a report, but 9A was a report. So this set up a long or cover. Now, for me, if I'm going into a report, I just, put it in park. And now we get the report and we get a huge buy sweep. The market is in balance. VWAP, mid, and VPOC are in alignment. This is still outside in trading. So after the report, put another short on. Overnight mid is a high probability target. These are available in Trader Lab. So basically all we're doing here is going slosh, terrible, least favored. And I always say this. So I get a sweep here and I'm looking for a short. Now right here, I'm looking for a short right here. Because this suggests to me counter rotation. Now I need a trigger. So I'm looking at this. I have this buying, the book is swept, pulls back. So right here, I'm going, oh, okay. But I have a statistic that's right here. I have to be very careful here. I hit this, and I'm thinking, well, I guess, we're going to go higher. I get another sweep. So let's look at this. Aggressive buying, which of course is the report. Higher. Where's my sellers? Higher, higher. Sellers are here. Higher, more buying, and a sweep. So it looks to me like it's going to go higher, except sellers are here, sweep is here, stops are here, and again, and let's look at the algorithmic behavior. This comes into the book. Now, as soon as I see this come in, I see this, and I'm going, okay, what do these guys want to accomplish? Is this to goose the market up so they can sell into it? And which side pulls is going to suggest to me which way we go. So let's try to see this. Notice how this is coming down and this is pulling away. This is suggesting to me mean reversion. So this right here sets up the short for me. Now I'm getting into order flow, and this is where an order flow tool can give you a potential assist or edge in understanding what's happening. So I'm putting together sweep. I'm watching the delta. I don't see the buyers. I'm seeing the sellers. I'm seeing the order flow. So this sets up a trigger here, stop here to here. Still mean reversion. Heavy on the mean. So what do we know here? Buyers were here. This comes into the book here. Now, I'm trading outside in, and I'm trying to come down and come around. So I'm on the short side, and I've only been on the short side so far. However, I also know that I've gotten primary targets down here. So I have to be very conscious that I can get out of alignment. And we have probabilities of coming here and up here. So these are my targets. But at the time, until it changes, I'm only doing one side, and I'm taking the short side. So this is my resistance. It's out here. My liquidity comes in. See the behavior? The liquidity was here. I have another sweep. I took another short. So all I'm doing here is I'm trading reversion, and that's outside in. I might have been better off just sleeping in because it's just a lot of work. So this is where the high volume is. Let me show you this. Now, this is very nuanced, and I always, it's a separate trade plan for this condition. Now, the other thing about, because the context is rotational, the high volume, let me just show you a couple areas to be aware of. Micro volume is there. Can't do anything with that because that's the volume that took place here. The next level of volume is here. I'm just going to mark them. And then you have this. So what these are microstructures or fractals. Too low, too high, retail. I'm out of here. Liquidity. Then this. Too low. It's actually here. Too low, too high, retail. I'm out of here. Then we come back and check it. Too high. Don't forget. Too high. Too high. If I break and check it and it's too high, where might I go? Back here. That's mean reversion. Struggling. And this is a trade I took. And while I'm taking these trades, I got to tell you, I'm very annoyed. And we're going to say, why? Because of this. Now, let's come back to the other side. Now, mean reversion is its own plan, okay? Yeah, Florin, it's terrible. I find it very hard. Yeah, these are good trades because I have a plan for it. But I also, my trade management is different in this condition because I'm kind of, I don't want to use the term scared because I'm not afraid of the market, but I'm trading because I know I have no conviction, not me, the traders are retail. It's us. So the higher time frame, so it's us and the algos. The algos like a market like this because it's pretty stable. And it's us. So if the longs are in here, where's the stops? In this leg. So we counter rotate. If we get sellers in here, where's the stops? Up in here. So it's sloshing. So my trade management is much more aggressive. So it's just annoying all the way around. That's all I can tell you. Notice this. So we have our algos here. We got this comes in over here, skews the book. So part of this thing with the order flow is to say, well, if I know it's algo driven and they're just beating up the retail traders, I have to be very disciplined to try to get aligned and use the stops to position to come the other way once I read exhaustion. Now we have another trade that sets up at the first hour. Now there's two things here. At 9 a.m. we have something called the IB 30, first hour's high or low. And then we have whichever side is taken out tends to favor the continuation of the first hour, which is called the IB high. Over a 90% probability, we take one of these things out, the first hour high or low. When you take out the IB 30, it suggests up. So I'm thinking about this and I'm going, well, this sets up longs. However, I'm still in mean reversion. So if I can come outside to the other side, so I'm going to take shorts back to here, and I'm looking to come out and looking for a long at some point, but not yet, because I'm looking at this coming in. So I'm just looking, and I'm looking for short. So right here, I come back to my location. I take another short here. So here comes across, I'm out. Here, short again, down to the mean. And as far as I know, we can come out either side, except statistically, I'm leaning to the upside, but my current condition is saying short. So, and subject to your, now, here's VPOC migration. This suggests there's more volume. So price and volume are moving together. And I posted in Trader Lab that value is moving higher. That is suggesting that the short side is getting a little long in the tooth. So what I was looking for is, first of all, short, down to here. I get this. If it bounces this way, I cover it. That's all there is to it. And I was going for to come back around to here. If this shifts up, I can do the following. I can bounce off, or I can test this. And if I get below, I go. If I test this and break up, I have to be out. So this here was a key piece. Right here. So this is key piece. If this is too low, then we can reject it. And then statistically at 9:30, I've got this. So right here, I'm still okay on the short. Over here, I'm okay on the short. Here, the teeth chatter because of this. Okay? So now with this, nothing more to do except I'm looking for a short here now. And here's what I did. Right here, I come out the top, and I'm now, this I think was not such a good trade for me, because right here, we have two possibilities in Trader Lab. The IB continuation trade towards the statistics above, or a short to come back here. I took a short, and I had the privilege of paying for a stop. So I got my short. I didn't get scaled. I got nothing out of it. I just got abused, and I took a stop here. Well, that's that. Hold on 1 second. Are you guys with me? So this comes in the book. So now I'm out of alignment, and I have to wait. So it was okay. Now here, not so much. I think I got a bit conflicted on this one because my brain was still going for reversion. But this here was real, and this right here is the key piece, and it didn't register well with me. And that happens to me because holding all these pieces. So this suggested higher. This suggested higher, actually. And this was mean reversion, which unfortunately didn't work. So let's watch now. So now this is a distribution. The outside edge is here. This is called a low volume node. Going to mark it. Now, since I've left the distribution below, let me just make sure I got the right spot. It's about there. Now I'm in a new distribution, which says everything below might be too low. And statistically, wherever we are, this value area low has about, I think, about a 70% probability to go here. So this and 1.5 IB. So those were the targets. And this one here, not so much. So I'm now out of alignment. Okay. So I can buy this out here because now I'm doing, remember what we're doing here. This, if this is the what we're trading here, two sides, at least that's what I was trading. And I break out of this side and I don't fall back in. Now I'm accepting this volume up here and I can do the mean reversion trade from the long side towards here. Okay? Let's watch it. VPOC migration. Now I'm going to come up in here. Where's my support? It's out here, right here. VPOC migration. So outside edge and clueless, IB, VPOC migration, suggesting higher. So this is a long. And you're trying to get there. So there you are. The good, the bad, and the ugly. There's not anything else for today. How we doing, guys? Now, let's talk about these algos. Maybe we can pick something up today from the order flow world. Bracket. Now, you can't trade against them, but you can learn to understand why and what's happening. So we had our sellers here. Now, do they want to sell more? Then you want to watch what happens here, here, and down below. When you see this, and order flow is a separate animal, and it's, I should say, the liquidity, in the book. So, because this could be all nonsense. These guys can push so they could sell. And then all of a sudden they disappear and you see it flip. These are the kinds of things that you can use as a heat map. What we know is the sellers are here, and now we have this. Now, this was our primary target. Now, remember, now there's more. If we can keep going, we have this, and this is our next area, this. You got settlement, and you've got the retail price from Friday. What did we test? Let's come back to the language of the market. This is the low of the day. This is the retail price from Thursday that we missed on Friday. So the market comes down. Is this really too low? Yeah, it is. Okay. Let's come back to maybe what we think might be too high. So that sets that up. Okay? So that's kind of how the auction can help you. And how, the thing, of course, for us is how, if, when. Other than that, it's wonderful. So when you have statistics, then you can aim the barge towards certain things, but you have to try to stay in alignment with the current behavior. So let's watch this behavior. Sellers were here. We got some more sellers up here. So this is just two-sided trade. Remember where the outside is. It's out here. And the other outside edge is down here. Remember, this is the last out here. See, the thing with low volume areas, so you understand, they're areas where the market ran. See, this is what created it. The market ran. Well, there's no trade. There's trade here, but the book was swept. It didn't auction. It just ran to a new level. The tendency, and I have to say, and it's always random, is the market will come down and come into this level and take out the stops under these swings because there's nothing here. So the market needs to come down. 550, let me just see what we got here. 370 stops, 100 stops, and buying icebergs. So, and in here, you can see the liquidity. Outside edge. Outside edge. And this is hard because where is the reversal? You know, this is what makes this kind of hard, because I'm looking right here and here, and it got down here. There's just no way to know, you know. And some of this is created by the momentum of the stops, you know, taking these guys out here, because the stops, retail traders put their stops on their swings, and they tend to do the same behavior. Stops are there, stops are there. So why wouldn't I think that it, and where's it going to go? No way to know. Now, we have a trade in the Trader Lab called VWAP to VPOC. It didn't get there. Here's your buyers. There's resistance. Here's your pullback. So you can be taking longs here if it's in your plan. Otherwise, nothing to do. And now the outside edge up here is now a new low volume node. And just see if you can see something consistent in a random environment. Now, what makes this more difficult, besides the rotational aspect, is the range. Because if this now is support, this high volume right here in this micro, let me just show it to you. So this here is where the sellers are. There's your sweep, says counter rotation. The buyers were here. The sellers were there. Sellers, buyers, break high, sweep. I now have a new consolidation. My outside edge is here. You don't need to be trading this, you know, because you have to be conscious of range. This is like you need a scalpel to operate in this, because there's no rotations that make it good for you to get risk neutral, in spite of the fact that we have this. So remember, guys, edge. It isn't, the thing about the auction is you can learn to read this, but you might not have any edge here, because even though the market is doing what the plan is saying, if you're taking mean reversion trades, remember, it was in the morning, it was outside in. Well, now we're doing outside in also. And the only way to participate in this is when it rotates, is to try to get long. But this is your little VPOC. This is your fair price. So by the time you execute, you're right on top of where your scale needs to be. So I consider this not a good, and I'm only talking about me. This is, I can trade some of this, but I'm always thinking about risk, not the profits. I'm thinking the profits come from good risk management and getting risk neutral. The profits don't come from chasing the market, even though randomly you're going to get paid. This is where the discipline comes in. So if you're not long and you're further away from the noise, then you have to, I think you have to determine in your plan whether or not you have any edge executing here. If you're outside, then you're just going to sit in your Barca lounger and you're going to just let the trade do what it does. So we're looking for this, not a recommendation. You guys, does that make sense? It's not a great day for trading. D, I can't say what Tradeovate provides for depth of market. I think it'll show you the heat map, but I think it's only 10 levels, but I don't know. I've never used Tradeovate. I think you might, you know, come to the Trader Lab. Others, I think, in Trader Lab use Tradeovate. I mean, it's very limited, but, you know, it can give you, it's a tool's a tool, and it's a good first step. Use the link in the bottom of YouTube. I'm sure you can ask in Trader Lab and you can get good answers there. How we doing, guys? So today is just, yeah. How we doing in Trader Lab? How are you guys doing on a day like today?
Sweep ES sellers at 5,691.5.
See the behavior, guys? Now, if you are lacking discipline, which is a problem for all of us because of FOMO, you're going to be making trades up. The idea in Trader Lab is that you know your trades, and they're on a trade plan, and this is mean reversion. But if you don't have range from entry to get scaled, which is here, there's no trade unless you've done a lot of tracking, and in this condition you somehow have an edge. I believe, and it's not a recommendation, this is the target and that's where we might go. But I need a location that gets me risk neutral. If I enter here, I'm entering at my scale. You see, I can't take the trade. Does that make sense? I know you're probably thinking that you want to take every trade because you're thinking dollars. It's not the way to think in this business. It's to think edge. Dollars come as an output of executing an edge. They do not come from gambling, even though you're going to have winning trades. Gamblers win, right? But the casinos only play games with an edge. You might want to learn something. It's a successful business model, you know? Does that make sense? How are we doing? Please give a like if you're visiting in YouTube. This is just one of those days, you know, where you know you want to take a shoe off and throw it at the screen. But it's just that there's not a lot of opportunity, but there is selective opportunity. And this is where, as discretionary traders, we use our discretion and we don't take garbage trades. We are patient, we wait. And you know what? If you don't get another trade for the day, then that's okay. Because the only thing that's going to give you the potential to sustain yourself in this business is an edge or vetted trade plan, and you know where your trades are. Because this is random. You know, are we going to get here? Maybe. Well, here's the other thing. How? When? And even if. So if we know that, we can't be chasing a statistic, even though this time, if we bought this thing right here, it may go there. And that will take you out of the business. When a trader is random, in a random environment, it's basically garbage in, garbage out. That's gambling, and gamblers win. And when you win, trading without an edge, that basically is reinforcing your lack of discipline because you get rewarded. It's Pavlovian. And the other thing is the lunatic, who I call Hyde, you know, Jekyll and Hyde, who's under the hood, your primal wiring, is extremely judgmental. Because in hindsight, let's say you took this trade and you're not scaled, and it goes here. The lunatic's going to go, yeah, I told you. Or you don't take it because you're following your plan, and then there's a huge buyer comes in and it goes to target. Hyde's going to say, you should have taken it. Next time the scenario shows up, and it is random, right? You're going to take it because Hyde is going to be thinking about and reminding you what you didn't do. Because now you're feeling loss when the trade plan says don't trade it. Well, if everything that happens in here is random, and it is, then the thing is, you only trade with edge, and you leave the rest to somebody else. It's the edge over time that keeps you in the business, not an outlier or isolated random noise, which is what this is. I hope that makes some sense, and I need to say that to you, because how do you trade this? Well, for me, it's mean reversion. It is outside in, but I have no range. So I cannot take, where am I going to buy this? You see? I know this might be interesting, but I still don't have range. So I'm just, and this is a consolidation, right? And what's on both sides of the consolidation? Well, you're going to have stops up here, and you're going to have stops down in here. So We'll see what it does. Do you guys have questions? This is just the kind of day it is. I'm not sure if I should even keep this stream up, but for you guys, because I think it's like going to the dentist. How we doing? There's been the way to apply the stats, and this is a great question in TraderLab. The number one element here is something called context. And we opened out of value on the edge of Friday's range. And there's a few ways to think about it. We're either rejecting the whole thing and we're going to do the Acapulco cliff dive, but we are in a somewhat uptrend in the intermediate time frame. So we might, and again, might just be taking out the week longs, get under yesterday's low, pick some stops out, and then go to some statistics below yesterday's low and this, which was the retail price from Thursday. And if this is too low, we've taken care of business down here, and also the ETH low. So I know initially I'm looking for shorts. So the context then is potentially rotations and then longs. The problem with the long side is, where do you get long? You know, you could be taking a long down here to come back across, or so what statistics do you use? You use the statistics for opening lower, slightly in range, and it's a toss-up. Is it out of range or in range? I look at both stats, but the context is number one. So for me, now I know some traders in TraderLab are going to be getting long down here. For me, as long as the condition's rotation, I just stay with the current condition. But I also, as I mentioned, and I don't remember if I posted this in TraderLab, I think I did, that we have to be aware of the IB30, IB60, 1.5 IB, and then this. So these are things you would have in your trade plan for today as possibilities. And then when you're narrating this thing, you have to be conscious of what happened here. And then be aware that maybe this was just grab some stops, you know, some inventory, and then squeeze. So right now it's longs only. Does that make sense? And then when the market is developing, when it once it comes out the IB high, and we didn't get back down and get below the ETH low, that is kind of suggesting to be conscious of the possibility of longs. And you could be on the long side even sooner, subject to your time frame. I mean, there's some traders in TraderLab that are going to be long down here, you know, and then there's other traders that are going to be just trading shorter rotations. That's where time frame and plan. So let's look at our outside edge. This is our outside edge. Again, this is something that if you're not already long, this is high risk, and it has, even though we have targets up above, okay? Notice this comes in. So let's look at this for a second. Liquidity comes in here. Liquidity comes in here, and it skews the book. So we have the liquidity here and the liquidity here. This pulls. You have some liquidity here, and then this is added up here. We rotate off. We come here, and where's our liquidity? It's back up here. So now we want to see if this pulls and opens the door to this, which is a strike, and it would be good if they want to push it into here to have algos come here and this pull, and that opens it up to here. So let's see what it does here. This is opening here. So we got to watch right here because I don't see anything here. Doesn't mean there aren't buyers in here. Here's the buy delta. There was absorption here. So this is still sitting in here. Let's see what it does here. This is where the absorption was. We got a little bit of liquidity here. We got this coming in. Let's see if we get a rotation. Now, if somebody comes underneath and this pulls, then we can go up here. So, and again, no way to know which way it's going to go. It's not the job. Does that make sense? Here's what's important. Buyers were absorbed here. We got some selling here, or icebergs, I say, limit orders. This is coming down, and I don't see anything happening over here. Very nuanced when it comes to this. Now, if this got darker and this pulls, it opens it up. If it goes the other way, see what's going on. Let's just watch the order flow. I should say the heat map and the liquidity, and if it's skewing the book. Then what you want, the thing I always think about is, where are the buyers? And are these guys going to pull? Are these guys are waiting here? Now, there's hardly any volume in this here as far as the liquidity goes. So I have no idea. But it is interesting to watch. And I know for me, and this isn't a recommendation, if I'm sitting in a position and I've got my, let's just say my stop is here, up here, and this disappears all of a sudden and something flips under it, I might, but you have to vet it, use it for trade management, because they're lifting the hood or the lid on the pot, and now the market's going to continue. Or if so it can go both ways, so bracketing algo. Which side? So it's an algo. You can't trade with an algo in the sense of, because it's, who knows. But I do know this is what's important. So are these guys going to stay in the book? Or are they going to pull? And then am I going to get buyers under here? And it could do, now they pulled, you see, but they're coming in. So that's all computer operated. That's what an algo looks like. Now, what's it going to do? Joy. You guys have questions? Peppy, what's this 18 minutes till launch? You're going to, when you make a statement, just tell us what that's all about, because that doesn't give us enough information. So what's your stats on that, Peppy? Thanks, Jerry. So we still have our little algos in here, and this is dark down here. So let's just watch and see if we can extract any insight from the behavior here. Now, I don't, I guess I kind of do is I'm location oriented and context oriented. The primary input is the context. What's going on? We're going up. Okay. What's the other possibility? As a rotational trader, I can use this stuff for potentially getting in alignment, because I have targets above. So for me, if I need an outside rotation to get long for continuation trades towards potential targets here. So this is my primary objective. But, not much here. You guys have further questions? Just ask them, because we only have a little bit of time left. This is just one of those days where there's just not much going on. We're in a tight rotation. The skew is up, and we have targets above. We're inside of yesterday's value area where most of the volume took place, and we have these. That's it. So for me, this is where I believe it might go statistically. It's not a recommendation, and we don't know. Tweet comes out, somebody, whatever happens, happens. Everything can change. So that's trading. Always use a stop. Always follow a plan. If the market doesn't fit your plan, you don't trade. You just wait for better days. You're not an hourly worker. Remember, this is gaming. So it's a business of edge, not keeping busy. Please give a like if you're visiting in YouTube. Desmond, how would I do it? Well, that's your plan. How I do it, I use structure. So if I get on the wrong side of it and I don't have a location to get in, I just wait until I do. And if I don't, I just don't take a trade. It's not that important. In fact, it's not important. What's important is the edge. Keeping busy or trading, I just wait for my edge. And if I don't have an edge, I just wait until it shows up. If it doesn't show up, I just go, well, that was nice, and leave it at that. But time frame specific trade management has to be, you got to understand what you're going to do before you do it. This was really the tip off right there. VPOC migration, break high, come back here. This is really the best place for your long. Other than this, if you're taking this, but this was an opportunity to get long because it's mean reversion. What is mean reversion? It's outside in. When the mean shifts higher, what is this? Mean reversion from the long side, outside in. Now this is also mean reversion, outside in. You see, everything is saying at the moment up. But how do you manage your trade? Well, that's rotation specific, to you. This is outside in. This is the same process that I was doing on the short side. Outside in, outside in. Changes, then it's outside in. And then this, outside in. To here. So that's it. I really can't tell you how to do something because it has to, in other words, I tell let's say I share how to do things, but how you assemble it, that's the point I want to make, has to fit your psychology. Some traders cannot hold the trade through counter rotations. It doesn't align with them because of giving, MFE back and the emotional stimulus of, and FOMO. Fear of loss, giving it back, and it's emotionally distressing. Those traders need a different trade management process. And then they have to accept that if the market goes here and they're out of position, it's more important for them psychologically to keep something versus being willing to give more back to get here. This is where multiple contracts come in because it's about getting risk neutral trade management and maybe multiple positions. And that's a whole different issue in the sense of how do you manage your runner versus how do you manage getting risk neutral and how do you manage obstacles for scales. It's like a different conversation because the runner, which might be going up here, is not managed the same way as something in this. Does that make sense? How are we doing in YouTube? How about a like, guys? By the way, if you're interested in Trader Lab, and this is the real world of trading, sometimes it's like a bullet train, other times it's like everybody's yawning in their rocking chair. And time is not an element in this. It is all really rotationally based. The clock is not material in this. The levels are. So what does it take for the market to come and check a level? The thing to think about here, this is a level that was important. And there's also an 85% probability we check either the previous day's high or low. There's a chance we don't, and I'm not saying it won't, that we don't get over yesterday's high, that we just come back in here. And we could do anything. We could, go anywhere. So that's not the point. So at the moment, this is the primary objective. And again, Duzman, the way to think about this is you could be trading from this through your statistics to this and be done. And it's a completely viable Trader Lab trade, subject to time frame. Does that make sense? Uh, 935. Let's see, 935, mean reversion. Okay, let's see what happened at 935. Yeah. This is the key for me because this is too low and now value or the retail prices move higher. Think of this like right here. This is a structured trade in the Trader Lab right here, right there. And you see this come in. You have absorption here. The buyers take control right here. Your resistance is here. So it's either going to too low, too high, ping pong. And now we take this out. And right here, we just test it. There. It's right on the button. Liquidity comes in, break high. This could be a long in Trader Lab if that's your vetted plan. Okay. Was not a long for me. It should have been in hindsight, but it wasn't. So I went from the other side and I got the, as you might say, hey for that. Then the next trade is a long, would be here. IB continuation, and then off you go. Come down, outside. This goes pretty far outside, but it's only cleaning these guys out. Buyers come back in. This is too high. Pull out. So you have mean reversion. You could be buying this to there or this against this to there, and then you're going north to the value area, which was the next target. And then if we get through all this, then we're looking at that. That's it. There's nothing more to this. Randomness, annoyance, and the rest of it. Yes. Anyway, I hope that answers your question on the absorption down there and how it fits with the structured trade. Well, Justin, that's the goal. This is kind of incremental improvement. Um, you know, AAPS, if you're trading the ES, I don't look at the NQ. I'm trading the ES. I used to watch the correlations. In fact, early on, not early, but let's just say there was a point I was watching 32 markets, and the trend and the up down volume, all that stuff, ticky, VIX. But what I found was what did that do? It created conflict. Everything is represented. The buyers, I'm activated in trading this. So I'm not trading the NQ. If the NQ is going up, I'm still trading this. It doesn't matter. If I trade the NQ, I'm not looking at this. I don't watch the correlations. I did for a long, long time. But all I did was put another input in there that didn't create anything for me. It just created another variable that had no edge. And everything works at times. So I just over time stripped out everything that didn't do anything. If it's redundant and it doesn't add an edge, then it doesn't belong anywhere near me. So I always used to think more, was better. And I found that more is actually part of the problem, because then you can't measure it in the sense of, does it have an edge, or is it just random? And the NQ correlation to the ES, what does that do for me? So I just don't do it. So anyway, I hope that answers your question. Sellers were here. Sellers are still here in the book. Notice it's dark below. So we want to watch this behavior. All we have going on here is a rotation at the moment. So and this is something that you guys have to vet and got to spend time on. You can integrate, of course, this into the book. But if you're looking at this kind of stuff, the algos, you can't do anything with them in the sense of trade. They're not a trade, but they can give you some insight when you're coming. For example, if I have a stop, let's say here, and this is coming down, I'm pretty happy with that. But if something jumps in here and skews it, and then I see this starting to pull, I might use that for trade management. Guys, you have to vet that. Please give a like. If you're in YouTube, use the link in the bottom of YouTube if you want to visit the Trader Lab community. There's no cost. All you got to do is verify your email so we know you're not spam. There's no cost for Trader Lab, and all the education that's available in the Bookmap Discord Trader Lab community. Don't forget the like on the way out. Today was just one of those days. Remember, we have open targets above. It's not a recommendation. Follow the yellow brick road. Follow the auction. Develop a plan. Make sure you only interact when you have a statistical edge, and leave the rest for somebody else. Thanks, guys. Have a great day. And don't forget the thumb up and the like, and subscribe to the channel if you want to get notified of other streams.